I'm going to invite, like I did before, we're going to have another group of investor panelists just join us up. I'm going to call you up, if you would mind coming to the stage. Sean Johnson from the Startup Institute is a technologist with TechStars in his background. Welcome, Sean. Rick Torin, one of our serial entrepreneurs and a friend here at the Georgetown on the faculty as a guest lecturer with Cupid. Maxwell Russell at SAS AG. Thank you, Maxwell, in the software space. Brian Smith, In-Q-Tel and a Hoya alum. Also, Sean, you're a Hoya alum as well, right? Okay, very good. The Hoyas are everywhere today. Anyway, great to see you guys. And we're going to do the same as we did with our last group. I'm sure some of these fellows were here before when we invited our investors to go through and to just give their read, if you will, on some of the companies so that we can really reflect, use that as a backdrop, share with you all what they liked of the companies that they saw. So we're going to start with the first question again, which is just to remind you all what these questions are. Which company presented the strongest business model? Who had the best overall presentation, and who possessed the best domain expertise or team experience. So with the first, we're going to lead off, and I'm going to start with Sean on the end. But which company presented the strongest business model? You want to jump in with a company?
Oh, wow, yeah. I wish I had already tallied my scores.
All right, you want me to start with Brian?
Yeah.
Brian, how about you? You're going to take this one?
I thought Visit Days had a really compelling business model, mainly because they showed the value that they create for their customer. They showed that they have a paying customer and have a proof point. And I think they show the cost savings that they can generate from their product.
All right, Maxwell?
Trip Tribe.
I like Trip Tribe. Okay, very good. We'll come back to that. Rick?
I also had the Trip Tribe.
Very good. Sean?
I actually prefer the power fingerprinting. I think
right.
Between sensors and their approach to it, they had a really strong approach to an untapped market.
Very good. All right. Want to talk a little bit about maybe what you all saw in some of those? You started us down that path, Sean, about sort of what singled out among
Absolutely.
those, and any of the other ones that you all saw together, if there were some threads in there that you thought were some business models. This is the toughest one, so we'll get a little bit out of this and move on to some of the easier ones.
I think I was really impressed by the understanding that they had of a market that's growing with wherever the Internet of Things is going and smarter devices being in the household and in the workplace and everywhere else that we're going. The ability to put sensors on devices is a huge competitive advantage in terms of just knowledge base, and they had a strong control over that with their advisory board as well as their operating team.
Very good. Rick?
I thought that Dave did a great job of getting in a field that he understood that profiling, using the technology to profile people in the groups made a lot of sense. Even though he didn't get into the detail, which you can't do in 4 minutes, it made me feel like he knew what he was talking about. His first slide about what's the first question everybody asked, I had that on my mind, so it resonated with me, so I thought that was a good explanation.
And I would echo that, and on the business model standpoint, dissecting, for any internet company, your business hinges on your average revenue per user being higher than your cost of user acquisition. So if you can tell me that your ARPU is higher than your COCA, you know what it is, it's tested, then effectively you've built a business model where I give you cash, you plug it into an engine, and more cash comes out the other side. So that's a very strong way of positioning the value of a business moving forward.
Great, and I kind of already explained my decision, but I thought all the presenters did a really good job in 4 minutes to try and describe their business model. But I think it's, really it's assessing what price point you're at and if the customer is really willing to pay for it.
Is there anything that you all probably didn't see among this set of presentations that you would have liked to have seen, or some recommendations for anybody when you're looking at any kind of business model? Just because they're all from different industries. Is there maybe one thing, I know you have many, but can I ask each of you just to share one thing that you actually look for, that's your personal thing you're looking for when someone's sort of sharing from you what they're trying to tackle?
to the customer acquisition strategy would have been something that I appreciated. I think a lot of the presenters talked about the market size and maybe a bit about their traction, but how they went about acquiring their first users and if that was actually more hustle or added some knowledge to the engine.
Okay, anybody else want to add?
Yeah, I would have liked to see more about go-to-market strategy, which is similar to what you're saying, Sean. But as an overview slide, I mean, how are you going to capture the market? I didn't see a lot of that. I would have liked to have seen that.
Okay.
There's a lot of, so invest with NextGen, but as somebody who also buys big companies for SAP, there's a lot of cost in signing up businesses. And so I would like to, kind of generally when I look at a business plan from in the B2B space, I like to see a very realistic cost estimate on that go-to-market strategy. What is the sales force cost? How are you partnering? Things like that.
Mm-hmm. I somewhat agree with that. Essentially, I usually look for a very frictionless sale. So how does the company make it as easy as possible for the customer to buy it? And also, how are you going to generate recurring revenues out of those customers?
Great. And obviously, we're asking our panelists to sort of dig deep on this, not only with the knowledge that it's hard to communicate a lot of that in 4 minutes, but hopefully that'll share something with those who've presented. But for the rest of you all as well, when you're making those presentations, either in something like this, but certainly also when you're talking to somebody that's looking at your enterprise. Certainly something around the customer side seems to be a theme on that. Next up, best overall presentation. I'm going to start differently. Maybe, Rick, I'll start with you. Who kind of caught your eye on best company presentation?
I thought Ann at Same Grain really had her graphics were well done. It was a real crisp presentation. I thought that was the best one.
Very good.
I'd go with Visit Days.
All right, very good. Brian?
I chose Ride.
All right.
I also chose Rod.
All right, so diversity among the panel on that. Very good. Thank you, guys. Anything, Rick, you elaborate a little bit. Anything else jumped out at anybody on a point that jumped out at you that you said, I really like that, it's memorable?
Visual effect.
Visual effect.
You bring your product in front of me, I think I understand it better.
Okay, all right, very good. So if you have show and tell, we like that. All right. Third question. Who, from your estimation or from what you learned today, possessed the best team, the best domain experience, expertise to really tackle the problem they've presented? We'll start with you, Matt.
So I would say power fingerprinting.
Okay, power
I agree, power fingerprinting.
I had the same thing.
Unanimous.
All right, very good. Bingo, very good. Good job, guys. All right, and so again, I'm going to ask the panel to come off of these 3 questions and really tackle the 4th question, which we had raised before as well, which was a little bit about the addressable market. And rather than limit it to these companies in 4 minutes, maybe talk a little bit about how you like to see some of that happening when you talk to companies. Next one, let's start with you on that, because you see a lot of that in what you do on a day job.
Yeah, so I overshared on the internet yesterday. I posted a letter I wrote to an entrepreneur a year ago about it was a marginal exit for us, but it was really 2 years of my life as an entrepreneur in a company that didn't go where we wanted it to go. And the thing that I realized afterwards is that the market wasn't big enough. It was $4 billion. That was the total market. And we were never going to get enough traction for this to be a home run opportunity. So when I look at any space, really what I want to see is there's enough room to fail and be successful. If you knock it out of the park, you should be Google. Right? Google, not every company can be Google, but you can be a multi-$100 billion company. Aspire to that. Aspire to something outrageous. Because 95% of the time, you're going to fail or not fail to achieve the grandest vision you have, but you still can do something amazing. So look for a big market. If you need 50% to be meaningful, of whatever your addressable market size is, it's too small.
You're a variation on, I think, what we heard on our last panel from Savratodia, which was, what was it, be big or go home? Something like that? Same sort of theory. Brian?
Sure. So for early stage companies, I think one of the easiest things to do is actually get a good board of advisors around you. You know, there's a lot of important people out there who want to help startups, who are really interested in, you know, startup organizations. And so if you're going after the government market, you really should put a team of, you know, well-known government people around you. Or if you're going after the financial services market, you really need to get those advisors on board as early as possible. And so I think that that's a really important thing to do as one of your first steps in starting a company.
Sean?
Yeah, so I would say really hone in on that key differentiator. So while the key differentiator could be your team, whatever it is, I think it's really important that when you're addressing the market that you bring that up in front and as loud as possible, because there's a ton of opportunities for you to get exposure to people, but the first thing that they're going to say is, well, you sound like the Me Too. And for a lot of pitches, you know, we're taught to be the this of that, but I think when you can stand on your own 2 feet, that actually allows you to really clearly articulate your value and be more memorable in the market.
Rick, you want to round us out on that one?
Yeah, I think that one of the things we failed to share with our audiences, our students, is the Chief Passion Officer job. Your companies are going to fail many times in the first year, the first 2 years, $0 to $1 million, $1 million to 10. And hiring people, getting people to follow you, being a leader requires a tremendous amount of energy. And that's the hardest thing to maintain and keep, and it's so important. You know, Jeff and his bicycle comes out riding out in the beginning, and the way he passionately described his company is a great example of that. So I wish everybody had that, and it's really hard to have.
Coming from an entrepreneur, that's good advice. That's great. That's great. So what I want to ask, maybe throw a different question at you fellas. A couple people talked to me at the break and said, you know, wouldn't it be nice to know, sort of, because you all see a lot of companies, what is it that they might see that they wouldn't want to see in a what do you hear most frequently that you're going, you know what, that's extraneous or doesn't help the case? And I'm, you know, not looking to see if there's anything you hear that people talk about when they're doing presentations that really
Market, I think, or too much emphasis on a market trend specifically. Okay. So I've heard many aspiring founder or current founder address why his or her business is set to take off because of some government legislation that's coming down the pike, as if everybody can't read the same news that the government's putting out. So when leading with that as an advantage, I think there really ought to be some type of unique position that you take on that, rather than, you know, whether it's crowdfunding or healthcare or energy or security. I think all of that you need to be really differentiated.
Anybody else? I'm sure you guys have seen a lot of things.
Yeah,
Yes.
I think alignment is such an important issue, especially when you go to raise money. A lot of people go to raise money and talk to everybody they can about, here's where we are, here's what I want, and they don't spend enough time analyzing who they are they're talking to and what kind of money they have available. Is it a short-term fund, a long-term fund, seed fund? Who are you and who are you trying to find and align with? And you can waste a lot of time talking to people who have no interest or aren't the right people for you to be a partner with.
So I'm a big proponent of lean, but not lean in the sense that there's not a lot of asset on the balance sheet, but that you have validated learnings. What I don't tends to turn me off in a pitch is when I see something kind of a presentation come through where there's a very polished business model, chock full of assumptions, with no data. I haven't gone into the market. I haven't seen this in reality. There's no customer interviews. There's no product feedback. Because it's very easy to create a spreadsheet. It's very difficult to create a product that people love. So if you can switch those two around, you're destined for great things.
Mm-hmm. And I agree with all that, but you know, one of my major pet peeves are the competition slides with companies. You know, you always see check marks on your company and no check marks on anybody else's company. I mean, the companies have to be doing something good to be in the market that you're trying to disrupt. So, you know, I really think that you should show how you're differentiated, but give credit to some of your competitors and Also make sure that you don't forget competitors. If I know a competitor out there that you have and you don't have it listed, that's kind of a red flag to me.
Very knowledgeable about the competition in the marketplace. Okay, so let's talk a little bit also about if there's any advice, because I know we've got different stage companies, and they're all in that early phase, looking for that next, that inflection point, if you will. Is there any type of networking, type of advice you might give this stage of company? Because I know each of you work in different stages. So is there anything for the kind and stage of company we're viewing today, specifically you might give them for next steps? Anything as a group or anything you would impart from what you're seeing in your day jobs? Any advice? Brian, you'll start?
I would say it's somewhat like a job interview in which, you don't want to apply to every job out there, but try and talk to as many people as possible. A lot of advice people give is just, don't ask for a job, but go talk to the person for advice. And I think that's an important thing to do in a startup company. I think you have to be very specific in which VCs you go after and know a lot about them, but it's okay to call up some, VC contacts that you have and ask for advice on a presentation or on the market, things of that nature.
Yeah, I think that that's entirely right. I also think, one of the things that people tend to do is stay in their circles. So if you're a startup founder, you talk to other startup founders. What's been very helpful for and you mentioned this, talking about your board of advisors comment. I think you should reach up in your industry and find people who've seen the things that you're about to see and know sort of the inner workings of a big establishment. And really make sure that you get exposure to them as well as the people who live in the earliest stages of corporate existence.
So free advice is really a great thing. And I know that everybody who's connected to the school they went to likes to give free advice to students who won't go to the same school. So I remember going through the alumni lists where I went to school and in the same industry, because you can really hone it down, and reach out to them and say, hey, we both went to the same school. I see you're in the healthcare industry. I'm trying to start a business. Can I ask you a couple questions? It's amazing how much they want to share when they know you went to the same school and you're trying to get in the same industry. That's free advice. So I would recommend all you Georgetown guys, call Ted Leonsis.
That's so funny, man. All right, Sean, you got to top that. I'm sorry.
Yeah, it's hard to top. So I would say, taking a page out of the same grain notebook is really build meaningful relationships. And there's, I guess, tools that you can use to leverage that. One of them, if you're looking to raise money, AngelList is a great place to look, but don't be the company that just puts your profile up there and starts poking at each and every angel investor. I think if you want to be strategic about this, one thing that you could do is kind of hold off on your profile and all of the momentum to actually make it look more like a tidal wave. That's one piece. While you're actually prospecting for angels that you prefer to raise from, actually have a preference and look for people that have invested in things like your company at the stage that your company's at and in sizes of investment that you think are appropriate for what you're looking to do. I'd use Crunchbase as probably a supporting tool for that as well. But the trick, or at least how it used to be, I'm not sure if AngelList is going to get all Google with you and change the algorithm every now and again so that you can never game it. But that tidal wave is really important if you want to get on the top of everyone's visibility and be prepared to sprint towards closing your round. So tactics.
Great. Any parting comments from any of you? You did a great job there giving a closeout, because I know we're going to have one of you select a company for one last pitch from the audience. But any parting comments for the companies here today and what you're finding in the marketplace today?
Do what you love. Oh, I would just say always do what you love. To see you all take the time to come and present and to see everybody that's in the crowd that came and took the time to support and listen, I think that there's something in you, whether it's career ambitions, but hopefully like personal ambitions that make you want to be a part of this community. Continue to let that shine. I think, you know, there's some folks that are wearing, well, not really hoodies, I can't tell, but there's like everything from t-shirts to ties, and, you know, don't let the tie kind of encumber like your childlike passion for what it is that you're trying to do, and let that show, because I think it will be a key differentiator, which is what Rick mentioned.
Rick, the man with the tie on, how do you respond to that?
I got dressed up today. I was very impressed with the group of presenters in both. I watched both of them.
Good, I thought so too.
And I have to tell you that if this fails, try acting. You're really good at
Yeah,
talking to the audience.
yeah. Okay.
I agree. I thought the passion was, you know, great with all these entrepreneurs, and that's the number one thing you look for. You want somebody that has the energy and passion to get a company off the ground. It's a really hard job to start a company from scratch, and I thought everybody did a very impressive job.
Yep, I think I echo that sentiment. It was great. So as you go out, fail fast, but don't fail the same way twice.
Very good. We're going to have one drawing. Kim, if you want to have maybe the man with the tie to do our 1 minute. And then we have a very special set of guests. I'm going to hand it over to Jeff, wherever Jeff is. Here you are.
Waveborn
They have to be here first. Oh, here, all right.
without a tie.
Without a tie. You get 1 minute as he's coming down. What's the company name again, Rick? Rick?
Waveborn.
What was the name? Waveborn.
Waveborn.
There you go. You are.
I forgot my slides. My name is Mike Malloy. I'm the CEO of Waveborn. We're a social goods sunglasses company that gives a gift of sight for every pair of shades we sell. We work with 2 nonprofits to donate prescription eyeglasses and fund sight-restoring cataract surgeries around the globe. Been around for about 2 years now. I started the company with a friend of mine while I was getting my master's here at Georgetown. It was a fun side project. I finished my master's last May. I quit my job at Deloitte in June. I moved to Dewey Beach, Delaware last summer to grow the business and continue selling shades. I can now go anywhere in the world that it's sunny and call it a business trip. So I'd say I've done pretty well on the lifestyle design side of things. We started with 1 style and 3 colors. We now have 9 different styles and 25 colors. We can do prescription eyeglasses as well as polarized lenses. And one of the best things about the shades is that they're durable. They don't break. They're made in Italy. It's a high quality product. Thanks for giving me the opportunity to come up here and talk. We are actually in the process of raising our next round of financing, so I'd love to talk to investors. We're looking to raise $2 million over the next 3 months. Thanks. Have a good day.
All right, so our panels, we can dismiss our panel. Thank you very much.